All right, hello and welcome everybody. If you would, let's just do a quick audio visual check here. I just want to make sure you guys can see the slide. You can see us, our beautiful faces here, ready to share a great hour with you here. Just type a Y in the question box or the text chat. Just make sure that all that is working properly. Deborah, thank you. All right, Paul says yes. Tommy, okay. All right, fantastic. So again, welcome everyone. I'm John Madison. If you don't know, I'm the VP of Marketing here at FFR Trading, who's hosting the webinar. I'm thrilled to have you all here for this special Traders Roundtable webinar. I think this is our third annual Traders Roundtable that we've done. So we're excited. We've got a great hour ahead, packed with some expert insights, some market analysis, real trade ideas you can put to use right away. Whether you're an experienced trader or just getting started, today's discussion will give you a valuable perspective on what's ahead here in 2025 and how you can position yourself for success. Before we do go too far here, let me put up the risk disclosure here. The strategies, the ideas presented here today are for educational purposes only and informational purposes only. Shouldn't be considered financial advice, and please consult with a professional before making any trading decisions. What we're going to cover today, I'm going to introduce you to who we are here at FFR Trading, what our role is if you don't know. And then I'll introduce the traders. We'll have our panel discussion, and then we'll have an interactive Q&A, so you can queue up your questions, and we'll get to those during the Q&A. And then again, special bonus for everyone that stays till the end, an educational trading package from all the traders and us here at FFR Trading. All right. Who are we here at FFR Trading, and what is our role here? At FFR Trading, we help traders and investors connect with proven professional trading strategies. We work with some of the best traders in the industry, some of whom you see right here, providing top-tier trading programs and market insights, hands-on support so that you can trade smarter and more confidently. Today, we're bringing together 4 incredible market experts to share their perspectives on the whole, on where the market is headed. Actually, we'll take a look at where the market's been, last year, all the stuff that went on last year that they saw good and bad, and then we'll get into 2025, where they think the market's headed, what sectors look strong, and some of the best trading opportunities they see in today's climate. So let's go ahead and officially introduce everybody here. I'm going to start with Joe Duffy. Joe's a veteran options trader, the creator of the Target Zone and Quantum AI programs. Joe's helped traders capitalize on precise market moves using his proprietary scoop indicator as well as his AI-driven trade alerts. So welcome, Joe Duffy.
I'm unmuted. Thanks, John.
Yeah. Joe, where are you coming to us from again? Are you on vacation once again?
I am on vacation in Palm Springs, California.
Palm Springs. Have you been up to the Bob Hope estate there? It looks like a UFO.
I can see it from the house.
You can see, all right.
Yeah.
That's close. All right, and next up, we've got Wendy Kirkland. Now, Wendy's a highly respected trader and best-selling author. Wendy specializes in simple, powerful option strategies that have helped thousands of traders profit in any market environment. So welcome, Wendy.
Thank you. I'm so happy to be here. Delighted.
And Wendy, are you at the homestead or where are you? You're in North Carolina, correct?
I am in North Carolina, top of my mountain, in my log home. Yep.
Awesome. All right, next up, we've got Keith Harwood, a professional options strategist and market analyst. Keith focuses on smart, risk-controlled trades that take advantage of market volatility and institutional flows. So, Keith, welcome.
Thanks for having me, John.
And Keith, where are you located?
Northern Indiana. So I bounce back and forth between Chicago and Indiana. Got a little bit more trees and nature out here. Not quite maybe the log cabin level of Wendy, but it's nice out here.
All right, fantastic. And last but not least, Ian Cooper. He's a market veteran known for his high probability option trades. Ian uses a blend of technical, fundamental, and news-driven trading strategies. So welcome, Ian. And where are you hailing from here today, Ian?
I'm in Baltimore, Maryland.
Okay. All right. Fantastic. Well, we're excited to have all of you here. So let's go ahead and start the panel discussion. First, I want to take a look back at 2024 and what are some of the things that you guys saw last year. There was a lot going on. Obviously, the Fed, went, had a change in interest rate policy, started cutting rates, and then they kind of paused it. We had an election and everything that was leading up to the election and all that. How did you guys navigate, through 2024? You all did great, but how did you navigate? Maybe Joe, if you want to give your thoughts, we'll start with you.
Well, navigation, I guess, for me isn't real. It's just, it doesn't matter the fundamentals of what's happening in the market. You're just really trading the price, or for me, also a lot of option pricing and how options are priced depending what strategy I'll use. So none of that, the election or anything like that, made much difference to me. We did make a ton of money on TLT, which is the long-term bond ETF. But again, that was driven by price, not by me trying to figure out the economics of the world.
So some great insights. And that video, we actually did a video on that trade, the TLT trade that you did, or you did a video that folks can watch on our YouTube page. All right, how about Wendy? Wendy, what did you see last year, and how did you kind of navigate the volatility and so forth last year, 2024?
Well, it was volatile, and to me, the end result was a lot of trades were shorter, where sometimes when there's a strong trend, you might be in a trade for a couple months, and it just chugs along and moves up or moves down, whichever way the trend is. But because of the different things that were going on, the trades were shorter, and the patterns that I teach can be applied to any time frame chart. So I don't want to say that it's easy, but you can take that information and apply it to the different charts and be able to enter a trade on a 30-minute chart instead of a daily chart. And you're in it for 2 or 3 days rather than being in for several weeks. So
All right, excellent.
it's flexible.
And that's one of the beauties of your strategy. I know you trade a lot of different time frames as well,
Sure.
which is great because it's helps traders that have different kind of goals. They can pick the programs that fit their goals.
That's exactly right.
And then and Keith, what was your take on 2024?
Obviously, we had a very strong year. When you look year over year, up about 20% over the last 12 months for the S&P 500. But a lot of it is exactly what everybody else is talking about. It's defining the risk. It's understanding the technical signals, understanding the order flow for me. And I do everything with options, so I can define my risk. I can generate leverage. Usually I'm looking at short holding periods, a couple of days. So trying to use artificial intelligence to identify what's moving now and what's moving up. And when the market's doing a dive, like, back in August when we had concerns over an economic recession or inflation or whatever, and the momentum is just not there. Moving to the sidelines is okay for a few days, even a week, and then reevaluating as the signals show up, and then using that to know when to step on the gas versus step on the brakes.
Right, excellent. And Ian, what were some of the things that you saw, last year? A lot of you started using the AI. I know Keith brought up the AI. Just started kind of using it in 2024. Now it's really kind of in high gear now in 2025. But Ian, you were one as well that started incorporating AI and dark pools in some of your strategies. How did that do for you in 2024?
Pretty well. Like everybody else, we were trading some, quick short-term opportunities. We were going after severely oversold and overbought situations. And what helped us a little bit with AI was we were able to look at what's called hidden institutional trading. Say an institution goes out and buys $1 million worth of a particular option. they don't want that known to the greater public because they'll unfairly move the underlying stock. So we use that to our advantage, with artificial intelligence.
All right, fantastic. So that kind of rounds out 2024. We really want to get to what do you guys expect for the year ahead here, 2025? Now we've already, we're at the end of February here. So you've had some time to kind of digest some of the stuff that's happening, that we've had that transition. We've got a new president, or former president that's become president again. And so we've had some, being able to digest some of that into the markets already here. But what are you guys seeing? That's kind of the big question. What's in store for the markets here in 2025? Where do you guys see the markets heading? Are we going to end the year higher here? Are we going to continue to make new all-time highs? Or do you guys see, is there a crash coming? Is there a recession coming? What are your thoughts? So maybe we'll pick back up with Joe. We'll start with you here.
Okay, John. Well, first of all, for context, the market in the last two and a half years has been up about 50%. So I don't think you can continue to expect that to go on without some shakeout. Even if it will go up higher, it will shake out first, in my opinion. So I think the first half of the year, at the very least, you're going to mark time where you get a lot of what we've seen for the last 2 months, which is back and forth, up and down. But within that context, I think the risk is greater to the downside than it is to the upside.
All right, excellent insight. And then, and Wendy, what are your thoughts? What do you see happening here in the markets? Are we heading higher? Are we going to crash? Are we going to go sideways? What are your thoughts?
Well, I think it's going to be more volatile for the next number of months, that there's going to be lots of swings up and down. Chances are there is going to be more pullbacks than, say, strong rising. And so to me, it's just going to be up and down for shorter periods of time, but probably overall declining, and a pullback. And at some point, then it'll hit a bottom, and then we'll work our way back up again. But likely it'll be later in the year.
All right,
I
excellent.
expect it to be choppy.
So choppy for 2025, maybe a little shakeout, and
Yeah.
then a bottom. And then Keith, what what are some of the challenges or risks that you see ahead? And maybe what sectors do you think might do well during this period in 2025 here?
So yeah, I mean, there's a lot of I think within that chop, there's a high probability of some sector rotation, people looking for new investment themes that match the new economic policies. I mean, you touched on the concept of what could really perform well in 2025. I think a lot of people understand that crypto and AI are top of mind. They are elements that I think are naturally looking to be added to a lot of portfolios. We have seen fairly strong performance out of financials, and maybe somewhat surprisingly, China seems to be doing pretty well right now. I tend to try to follow more of the technical than the fundamental on it, but this chop has been maybe difficult at times to navigate. And eventually those chopping markets, though, tend to resolve one way or the other. Either we get a greater dip than what we've had that's been a buying opportunity each time so far, or we find that maybe we do break down before resuming the upward trend. It's all just going to be, for me, a lot about the technicals and trying to see when we have clarity for the market. And as we continue to have news and shifts, that chop is difficult to break out of. So until we start to pare down some of those inputs, the chop seems natural for now. And then it's just all about identifying those short-term opportunities as a result until we get a real bull trend again. But I think, as Joe mentioned, looking for 20-25% year over year, that seems unlikely to me. But I've been wrong before, and I'll just trade the flow as it comes through. So.
Well, right. We've kind of pushed the average. I think over the last 30 years, the S&P has done about 10 to 12% on average, I guess. So we're way above that. You know, when you look at all the indicators, you know, the so-called Buffett indicator, the Shiller PE ratio, everything's saying that the market's overvalued. Now, Ian, this is something that you always look at in all of your strategies, is those kind of overbought, oversold levels. What do you see happening here in 2025? And will you be ready to take advantage of those opportunities?
Oh, definitely. You just mentioned the Shiller PE ratio. Right now, that Shiller PE ratio is at its third highest peak that it's ever been. It may be, you know, above the second peak now. But, you know, the year ahead will definitely be volatile. And a lot of that's because, you know, there's a lot of lofty valuations out there. There's the tariff fears, trade war fears, fears of inflation, and the fear maybe the Federal Reserve won't be able to cut interest rates as aggressively as many people would have liked. Still along the way, we're still finding a significant amount of opportunities out there. You know, I'm going to share a few of them in just a few minutes here. One of those opportunities is in the recent pullback on the Dow using DIA calls that we'll get into in just a moment. But, you know, moving, you know, near term, immediate term, you know, there's definitely going to be a good deal of volatility that we need to be aware of.
And volatility, right? As traders, you like the volatility, right? Is there a point at which you say things are too volatile, that it's not good for us? And you guys, anybody wants to chime in on that? Is there a point where the volatility is too much, where it's too much risk, or is the volatility always just a great thing and it provides great opportunities?
I'll jump in if I could. I would say this on volatility, John. There's potentially a lot more opportunity, but I really don't think there is. I think volatility, if you're buying straight puts or calls, or you're trading futures, is a bad thing, because what happens is if you get in, the market moves a little bit your way, you know how volatile it is, and so it could come back in your face immediately. So you're tempted, or to take smaller profits. But on the other side, if it goes against you, you're going, well, it's so volatile, this move isn't that big, and you can let that loss run into something bigger. So psychologically, I think it's tougher to trade, and just the mechanics of trading are tougher when there's highly volatile markets. For that reason, it's much easier to have to take small profits, and much easier to have to take big losses. So now, having said that, the one thing I do like about volatility, and I really like it, and I've done some strategies just the last couple of days taking advantage of this, is what happens is retail investors will bid up the options that expire in a day or 2 days or 3 days. So these options tend to get huge time values on them. Whereas if you go out 2 months, investors don't tend to bid up the premiums or the time value on those options nearly as much. So what you do is you have the opportunity to buy something that's relatively fairly priced in a long-term option, and sell something against it that's relatively overpriced in a short-term option. And if you've ever been to my webinars, you've seen the graph of exponential time decay in options, and you want to be short, like the floor traders are, options that are near to expiry. So you can often make money on that volatility. I don't want to say a mispricing of options, but just how options are generally priced when there's a lot of volatility. The time premium goes into the short-term expiries, and by being short those, you are going to make that time premium no matter what. If you sell something that has a $4 time premium on it, and by time premium I mean if it has an intrinsic value of $1 and it's selling for $5, in the next 3 days when it expires, no matter which way the market goes, that $4 time premium is going to evaporate. So you're going to make that money. So there is lots of opportunity with volatility if you're using option strategies correctly.
Excellent. And those of you that were listening to Joe's kind of explanation, it's basically what your target zone option program does.
Yeah, we do a lot of that. Yeah,
you do a lot of it.
straight puts or calls, but yeah,
you do other stuff with it, right?
Yeah.
But but that's predominantly what you've been doing, and that program has been running for a long time. So if anyone out there is interested in that, you can give us a call here at FFR Trading, and they can give you the details of that particular program. But anybody else want to tackle, volatility, friend or foe? Is it become a point at which it becomes too difficult to manage the risk, or is it, we can still control the risk and the rewards are just going to be bigger? How does that work for some of you?
I'd like to say a little something, just that there's apt to be some folks that are here that might not realize with options that there are calls and puts, so that you can actually make money on a put when price drops, where if you own the stock and it dropped, that is unfortunate, and you won't come out ahead until it rises back again. But with options, you actually are able to make money when the equity drops, because you're looking at charts, perhaps seeing a pattern, seeing what's happening, and that's what you base your trade on.
And that's an excellent point, Wendy, because all the programs that you all offer, you trade both directions. So we're not limited to just the long side. You both
Right.
utilize, or you all utilize both puts and calls in some form. It might just be straight long calls and long puts. Some of the programs like Joe's, he does utilize spreads, but that's very, very important. When you talk about the volatility, the fact that, well, if the market's crashing, I remember, I forget what it was, Joe, you made a huge, had a huge quarter during one of these crashes, because you were, I think, long puts on the S&P 500, and I think you all had similar trades during those periods. So just know, any program that you get involved with these traders, that they know how to play both directions, and they do play both directions. So very important point that Wendy brings up there. Maybe we should shift over to the AI, kind of the elephant in the room. Some of you are already utilizing AI in your programs. They've been doing great. Where do you guys see AI headed? This is a kind of a fast-moving thing that's changing almost on a daily basis. What are you guys seeing out there with the AI, and how that's progressing, and how's that going to affect trading?
I think AI gives a tool for people to utilize in their trade analysis, allowing the computers to do some of the work. I mean, just like Excel can give you a lot of analysis that you would have had to do before, pen and paper or a calculator. It just helps do some of the advanced analytics. We use neural networks, which effectively replicate the way that the brain works in terms of calculating some of the probabilities. And I just think it's another high-powered tool that makes for greater accessibility to market analysis for basically anyone, as a result of it being, sort of a cheaper entry point to utilize AI than to have, supercomputers and large infrastructure build out in order to do trade evaluation. So it's an efficiency tool more than anything at this point. And I think it's great for trade analysis and for opportunity, ways to spot opportunity.
And Joe or Ian, I know both of you have programs that utilize this. What are you seeing?
I like using artificial intelligence. I mean, it's a great assistant for finding trading opportunities, but you need that human element. After you find that opportunity, you need to look at it fundamentally and technically. You can't just solely rely on AI to do all the work for you. There has to be that human approach to it too. When I trade, I'm looking at 5 different technical indicators that tell me exactly what the herd is thinking with individual stocks and markets. You can't often get that with just relying solely on AI.
And Joe, what are your thoughts?
Okay, well, I have an AI program that is artificial intelligence, I guess, but really we have to understand what artificial intelligence is. It essentially, if you've ever, corresponded on a chat and you get the so-called AI, all they're doing is looking for keywords and then sending you to a pre-prepared, response that hopefully will answer your question. And for AI, I think for a lot of us in trading is what used to be called backtesting. We're looking for patterns in the market, and then you go back and test them on your historical data. So I don't really think AI for trading is to the point yet where it's making decisions like a human. So for my AA program, it's essentially just we've been running it now for several years, and the same patterns that worked for years apparently keep working. So really, that's all it is. It's not like sometimes I think when we conceptually view AI, it's the machine's thinking for itself, and it really isn't. It's just it's taking the inputs that you give it and testing it for you, much the same as the the help chat is when you call your phone company or whatever.
So basically, like with your program, Joe, and we'll get into it in just a bit here, that you're telling it, you're giving it the parameters, and then it's kind of doing the heavy lifting for you and going back and saying, hey, this is what works over time.
Well, yeah, because we've tested it. Say if we're testing 100 stocks over 40 years of data, you got millions of data points. So yeah, that's but the input to find the pattern essentially still comes from me, and then we take what the AI discovers and we go back again. And as long as you only have one or two parameters, you're fine.
And Wendy, what are your thoughts on AI? I know you may not have a program that specifically utilizes AI, but your programs are crushing it. Just little old you still plugging away. But what are your thoughts on AI? Is it something that intrigues you? Is it something that just not for you? Where do you stand on that whole thing?
Well, I'm interested in it. You are right. I don't use it at this point, and yet I have looked at it and studied it a little bit. But as far as my services, we are looking at charts and looking at specific patterns, and you're entering when things happen on the pattern to confirm what is likely to happen next. So at this point, I have not really utilized it within any of the services, but you don't know, that might be something that gets used and added down the way here a little bit, but it is interesting, but I am not utilizing it at this point.
Now, I know you work with your family. They
Yes.
help you through it, and they're trading too. What are their thoughts? Are they kind of pushing you?
A little bit. They
Yeah.
definitely, being younger, are more interested, and it is more their thing. But at least at the moment, it's not anything that we have incorporated. But
So maybe
and
in the
I say
future.
that there are we have some little programs where it's set up to point us in the direction, like look at these few, see how they are, and then once in a while we'll find something, say, oh yeah, it's getting ready to cross up here, going to the second or third stage of the pattern, and so I'm thinking there, but they're already monkeying with it a little bit. So
Yeah, I was going to say maybe at some point we're going to see some spin-off program from the family out there in North Carolina. All right. Each of you, we're going to go through one of the programs so everyone can get an idea of what the programs offer. Some of you, have asked, is this just an alert service? Well, it's a lot more than that. We call them learn and earn programs. So it's not just getting the alerts, it's also getting all the educational material that comes. So if you want to learn the strategy, like if you want to learn Wendy's strategy, Wendy's had a lot of success teaching people because she has a very almost artistic analysis that she does with the indicators that she does, that it's very easy for people to understand and pick up and do on their own. And all of you have, you know, your educational material that comes with the program. So I'm just going to go through what you get when you do subscribe to one of the programs. First of all, you get direct access to the traders. And I know all of you have, you know, spoken directly to your subscribers through phone calls, through Skype, you know, helping them, working them through, you know, some of their trading questions and things. But so they're getting access to you. They're also getting, obviously, the direct trade alerts through email or cell phone. And that's, you know, not just the entry, but it's also the exits. You're letting them know exactly what option to buy or close, you know, the strike prices, the expiration dates, the limit price to get in or out at. You give them all the information they need to execute those trades for themselves. But you also have constant updates. All of you, I think, have some type of daily, weekly recaps. Maybe Ian, I know you do a recap. Is that now on a daily basis or a weekly basis? And you're updating your subscribers as to what's going on, what you're seeing, trades that you might be in. Talk about that a little bit. What is involved in that.
I've been doing a weekly look at the week that was and then the week ahead, and we'll talk about, you know, potential catalysts for the week ahead. We'll go through the trading opportunities that we shared in each of the programs, and then we'll just get into, you know, what's going to happen with economics or earnings, or we just try to touch as many bases as we can. And sometimes we'll also include another trade opportunity in that video as well. And usually that's out Sunday afternoon or early Monday.
All right, excellent. And Joe, you do yours is a daily recap where you're going over, you know, the markets, what you're seeing, some trades that might be setting up. You're kind of giving them subscribers a heads up, you know. Talk about that a little bit.
That's correct, John. Yeah, it's basically what you said. The thinking behind what may be coming up and what we're doing, or maybe what we just did, and you know, a little bit of try to be an unbiased directional trader. If that's, you know, people don't want to hear, oh, it could do this or it could do that, so we try to have some sort of unbiased view or on which way I think it's going to go for the very short term, even if it's just that day. So yeah, that's it. And
Keith, I believe subscribers get you have I think it's a 12-week course or a 12-part course on options that they can go through as a subscriber.
Absolutely. So you get a in-depth analysis of, you know, how options work, how spreads can work, understanding more about options. We also have the weekly recap, and we also do morning and closing bell conversation about the market. So about an hour in the morning, hour in the afternoon to talk through market conditions and look at various opportunities that some within the trading program and some outside of it. Just, you know, as people have questions, you know, if you're looking at Apple and I'm not looking at Apple in the program, talk through what's going on and what we're seeing in the market as a result of current volatility or trends.
And you also have a live trading room that you do. Talk about that just a little bit.
Yeah, so the live trading room, you know, we'll talk through anything with a big news event coming up, such as earnings, as well as what's going on in the broad market. As mentioned, you know, a lot of times looking for some of those shorter term opportunities that may not fit the normal signal-based program that we do more through AI, and look at, I mean, as others have touched on, you know, those patterns, recognition, understanding where the market flow is, and using those years of experience to evaluate current market conditions given everything that we're seeing.
All right, fantastic. And you can see the level of education. I mean, they really go above and beyond anything else that you can get out there. Like I said, it's not just trade alerts, it's all the education that goes with it. So if you actually want to learn these strategies, right, you can do that through the education. We do also offer third-party registered brokers. So if you are not able to execute the trades, maybe you run a business or you're working, this is an option for those that don't have the time management available to self-trade the rules and the signal alerts. Right, so you can set it up with a third-party broker and have these other brokers that have been working with these traders for many years to, they know how to execute these trades properly, and they can do that on your behalf. It would be your account, of course, but you would just allow those trades to be taken in your account. All right, so some great offerings for each of education-wise, trading-wise from each of you through your strategies. So let's get into the strategies. We're going to profile one of the strategies from each of the traders here, and then we're going to get their trade idea for 2025 for you guys. So I'll bring in Joe first. So Joe, if you can take a little time between rounds of golf here and just go with me through your quantum AI program here. So the numbers we're looking at here are roughly based on a $10,000 account size, allocating between $1,000 and $1,200 per trade. These numbers are non-compounded. Let's just talk about the academic details. Again, this buys puts and calls. So again, does go both directions. You talked a little bit about in one of the prior questions, Q&As here, about this program is basically you put the information in and then the AI spits out the trades and you're just passing those along. Tell us about that, how that works.
Boy, that was a pretty good summary, John. I don't know what more to add. It's rule based, so there is no unlike target zone trading where there's me looking at option pricing and so forth like that. This has no discretion, whatever. We just take the trades and put them on. So it's 100% mechanical, whereas target zone uses a lot of I guess it's rule based, but it's soft logic. There's a lot of input from what I see in the options or what I see in sentiment or whatever, or how just the market feels to me of option flow or whatever like that. So they're completely different, but quantum is basically just 100% rules based, and it's only puts and calls. There are no spreads. So the two programs kind of work well together because they're quite different.
And this is you're trading basically the top 100 liquid stocks. So these are big name companies, very liquid, easy to get in and out of. Average trade says about 4 trades per month. I'm guessing that varies depending on what's going on in the market, right?
Correct. Yes, that's correct. Yeah.
And it says short-term moves average a few days to about a month. Have you ever is it programmed to exit at a certain point in time, or is it hold it till it reaches a certain threshold or trailing stop? Or
there are rules for all of that, which are adjusted. Just philosophically, the market's not going to do what you want it to do. So you have to be continually adjusting your parameters based on the market, what the market's done and the market's feedback. And one of the most important things is the market doesn't know where you got in. So basing everything off your entry price is it's like an arbitrary number. You're far better to base it off what the market's actually been doing since you got in than you are worrying about your entry price, which to the market is a meaningless number. So the market doesn't care or where you got in. So we use actual parameters like highs and lows or time in the market or how fast it's gone somewhere or how fast it hasn't. We use all those things to calculate what our next step should be. And that's done continually. So it's not done just once at the beginning. It's continually updated.
All right, perfect. Now, let's go over the performance summary. So it's averaging 51% per month, which is insane numbers. The average annual return, 606%, winning 77% of the trades. But here's the beauty. The average winner is $602. The average loser, just $265. Those are phenomenal numbers. Do you think you're going to be able to, you keep, compete with that with target zone? Are you going to be able to keep up with the AI?
Well, nothing goes in a straight line for sure. Like we just had the gentleman on last week who traded it for 3 months and all he had was winners from both programs actually. But I've also had emails from people saying, "Hey, well, I got in your program and the first 4 trades were all losers." But both things are possible and both things happen.
Right.
So, yeah.
And we're always very transparent with that. So Joe, you've got a trade idea for us, at least one anyway, I know. If I hand over to you, you ready for that?
Sure. I'm not going to bring the chart up or anything like that. I'm just going to say,
Okay.
philosophically, I think we're have been in a period and will continue to be in one that's not like the markets we are weaned on. It used to be that if the S&P went up, it floated all boats pretty much, and if the S&P went down, particularly, it sunk all ships. I don't think that's going to happen as much anymore, or it hasn't been happening. I think it's going to be as my subscribers are sick of hearing me say, a market of stocks, not a stock market. So I think you can be long things in a declining SPY market, and you can be short things in a rising SPY market. Perfect, sort of headline example. Recently, Apple dropped like 15, 17% or something. And meanwhile, during that period, I think the SPY made 7 new all-time highs. So it will be a market of stocks, not a stock market. So, and also for high net worth individuals, I think that if you can find a good stock picker, you're in good shape. I would say my favorite pick for this year, because I don't expect a lot of, I think it's going to be not unidirectional, but I'm going to go with the bonds again. I'm going to go with TLT, and I would buy the either a far out, very far out, long dated option and start writing short dated against it, or just buy the TLT itself and operate the same strategy, basically just making it a covered right. I think that President Trump has actually expressed his feelings about the bond market this time, whereas in this first term he was always concerned about the stock market. So I think he only did it once, but I wouldn't ignore that that little hint that's been dropped. So yeah, I'm going to go with TLT and just writing against it, writing options against it.
All right, fantastic. And I know I'm sure you're going to be employing that in target zone, so those of your subscribers will get that those trade setups. All right, let me bring in Ian Cooper. We're going to look at your Algo AI trade alerts and some of the key points with your the Algo AI is it focuses on dark pools. Talk about dark pools. What are dark pools and how do they help you trade?
Dark pools are simply, institutional trades that I mentioned earlier. When you find that list, I'm kind of looking for, trades above $500,000 to $1 million in that was invested in a single, call or put option, and then I'll take that information and I'll look at what the stock's doing technically and kind of go from there. But the dark pools are just made of the institutional trades.
All right, fantastic. And this thing has really had a tremendous performance as well, averaging 30% a month. The average annual return 356% a month. You're winning 86% of your trades. It's insane. The average winner is $650. The average loser $583. And it says the average days in trade is about nine days. So it's fairly short term. Trades about 3 to 6 trades per month. Again, probably changes on depending on market conditions. But you also use your traditional technical indicators as well, as you had spoke about before. You're not just blindly following the AI. You're looking at it, putting it on the chart, and determining whether it's a go or not. Right.
Right. Yeah, we're basically just trading on herd mentality, on severely oversold, overbought conditions that we can spot easily just using RSI, MACD, Williams, Bollinger Band set at 220. Full stochastics, even money flow can be used with all of that.
All right, fantastic. And I know you've got a few trade ideas for folks. Do you need me to hand over to you and make you the presenter, or do you just want to verbally give them?
Yeah, I can talk about them real fast. You know, and of course, the markets were doing a little better. Markets are waiting on NVIDIA earnings after the bell, which could drive the NASDAQ higher tomorrow if the earnings are good. But of course, the Dow just slept. It's down about 240 points at the moment. It's just insanely volatile out there right now. But as far as individual opportunities, we're looking at Amazon right now. Amazon is severely oversold on RSI, MACD, Williams percentage range. It's now down to double bottom support and is starting to pivot higher. We'd like to see this one run about $10, $20 higher from here. One way to trade Amazon is with the March 21st, 2025 217.50 calls, which can be picked up, today if you want to. We're also looking at severely oversold conditions on Microsoft. With Microsoft, you can buy to open the March 14, 2025 400 calls. Microsoft is now sitting at support dating back to about August, kind of pulls back to this line in the sand, and then pushes aggressively higher to about 400 to 450 a share. We'd like to see that pivot higher again as well. Also, earlier today, when the markets were behaving, the Dow Jones had caught strong support at around 43,621. The Dow is also severely oversold at this point on RSI, MACD, Williams, and full stochastics. I would wait for confirmation of trend change before picking up DAA March 21st, 2025, 436 calls. I'd wait a day or two just to see if the bottom's going to hold, or if we pull back further, potentially, refilling a bullish gap around, 42.5. So that's what I'm watching right now. That's where our short-term interest is.
All right, fantastic. I mean, so folks, hope you appreciate, you're getting specific trade ideas from the traders here. All right, let's pull up Wendy here. So Wendy, we're going to look at your first strike trade alerts and some of the academic points and performance. This utilizes, as I think all your strategies do, your P3 squeeze pattern, and that's P3, which is the long pattern, and the 3.5, which is the short pattern. Utilizing both puts and calls, and you're utilizing the ETF, so the QQQs, the SPYs, and IWM. And this one's great because it trades, you're utilizing daily, weekly, the 10, the 30, and 60-minute charts. So you're really getting both a little shorter term and longer term. Anything you want to add about the strategy itself, some of the academic details?
Well, I guess I would like to share that as much as it is important to me to enter trades and earn a profit, and that is all part of the program, I also am very interested in teaching people to trade. And so all of my services come with a book, and I share it all. I don't hold anything back and figure, oh, that'll keep them close to me as far as me doing the trades for them. I would really like people to learn to trade on their own and be self-sufficient. And so that is part of my goal. And the patterns that I teach, and this is even reflected back on some of the things we were talking about not using AI, is I show you that every single equity goes through a life pattern. And it's first conceived, and then it's born, and then it's an infant, a toddler, and teenager, it acts out, and then it goes into this adult stage with strength, And if ever that adult stage fails or doesn't happen, I should say it doesn't happen, not that it failed, but failed so that it didn't happen, then you know 100% what's going to happen next. And there is not a whole lot in the market that you know 100%. And yet that is an aspect that's the way it works out. So what I teach can be applied to any time frame chart. So that's why it is easy to have weekly, daily, 10-minute, 30-minute, 60-minute chart, because you can apply the pattern to any time frame chart. I'm sorry, I got going there.
No, that's fantastic, because it reminded me that you do share, the indicators that you use, which most people can get in any trading package, but your settings as well, which is fantastic. So let's look at the performance summary here. So these numbers are from January of 2023 to December of 2024. You're averaging 70% a month here. The average annual return, 843%. Again, winning 84% of the trades. The average winner and the average loser are roughly equal there, but that's what drives it, is that high win percentage. I'm guessing that the trade idea that you have here obviously is based on your P3 pattern. Did you want me to switch over to you, or do you just want to share it to them?
I could just share. I guess I was set up to be able to switch it over, but it doesn't matter that we're looking at it. One of the equities is First Solar, FSLR, and on a daily chart, it is starting to head up. It actually had earnings yesterday, I believe. And so today it opened up earlier. When I looked at it, I think it was up 8%. It might be up more than that at the moment, I'm not sure. But it was starting a bullish pattern, and looks like it likely will move on up maybe another $10 or so.
Nice.
Excuse me. Then it might hit the pivot point and go sideways for a little bit, and then if it pops through, it'll continue up. But that definitely has the potential to move through the P3 patterns and the life cycle stages that I was talking about.
All right, excellent. And the others?
General Motors, GM, was another that looked like it was getting ready to have a positive move. I haven't looked now. I understand that the market has pulled back in this last hour that we've been talking, so I haven't looked since then, but it looked solid when I looked earlier.
I think, if I'm not mistaken, it was GM that announced, I think it was this morning, that they are increasing their dividend.
Yes.
If I'm not mistaken, so that's certainly a positive.
Yes.
All right, and then again, last but certainly not least, Keith Harwood. Keith, your paid, what we call the paid strategy, it's predictive AI, right? The stats here, this is buying outright calls, call options on stocks and ETFs. So this one, is this the program that you don't, it's long only, is that right?
For long only, found that generally speaking, for the 3-day holding period, it has a higher probability of success on the short-term moves. Excuse me.
And short-term, you mean that this is holding for 3 days?
Correct. Yeah, we've gone very mechanical, rule-based on it with a 3-day holding period. So very short time frame in order to constantly cycle through that momentum flow based upon the AI signals.
Right. So you're in on Tuesday, out on Friday is basically what it comes to.
Absolutely. Yeah.
Yep. And it's 100% AI logic. Obviously, you've guided it with, as Joe was talking about, he does with his. All right, the monthly average, so it's averaging 13% a month. The average annual return, 152%. Again, these numbers are non-compounded. Winning 60% of the trades. The average winner is $389. The average loser just $247. So fantastic numbers there. if you can think, and we'll talk about this with folks in a minute, of what these kind of numbers would do for your, let's say you're trying to save for retirement. You've got that IRA. Think about what these numbers would do for your retirement. So Keith, you have something that you want to share with everybody, something you think is going to do well here in 2025?
Absolutely. So I think one of the things that has started to come to mind for people is cybersecurity with all of the advancements in AI. So that led me to start looking at the ETF BUG bug. But in particular, within bug, the largest holding is a stock called Fortinet, FTNT. It's not currently lining up for our AI signals, but over the course of time, it is predicted to have significant appreciation over the next 6 months. So based upon the pattern recognition, it looks like an attractive potential entry in the near-term future. The AI says it could go as high as $150 a share, which would be 50% return from here. That's what the pattern is identifying as a potential output. I'm not necessarily betting on a 50% return in any given stock over a short time period, but it shows the strength of that pattern that it is forming based upon the inputs that we have for the stock.
Awesome. Again, I hope those of you watching really appreciate the specific, ideas that are being given here. So I'm gonna have to pull up my charts and take a look at some of these as well after we leave here. All right, let's go ahead and start our Q&A with the audience. I know you got a lot of questions you guys have been holding, if you want to ask a specific trader or just a general question, that's fine. I will. Daniel posted his early, so I'll pull this one up first. And he said, this is directed to all the traders. He said, I'm a high net worth individual and I want to know at what point does account size become too unwieldy using your trading techniques? In other words, how big does the account size need to be before you start experiencing liquidity issues such as delayed or split fills or possibly no fills altogether? I don't know if who wants to kind of pick that one up or start off with that one. Great question, by the way.
Okay,
Yeah,
I'll
Joe.
go if nobody else wants to. Okay, remember that the floor trader's job is to make the market. So if you come in and buy 10 calls or you come in and buy 5,000 calls, his job is the same. He has to sell them to you. So it's unlike with a stock, if no one has it for sale, well, then you can't buy it. In options, you want to buy 5,000 calls, the floor trader is going to sell them to you. That's his job. And then, of course, he'll hedge it off in the market. So now, having said that, does liquidity matter? Well, it matters a little bit because when you go to get out, there still has to be a market there for you. And, they will knock the bid down if you're trying to constantly hit it to get out of your position. So it matters somewhat. Now, if you're in ETFs like the SPY or whatever, it matters not at all. People are doing multi-million-dollar trades in the SPY every day, and even in individual stocks, and even some stocks that aren't that big, you'll see million-dollar trades. So I don't think that it's a huge issue. Could be a small issue, but I don't think a prohibitive one.
All right, excellent. And BE asks, what is the ratio of calls to puts that you are seeing in your most recent trade recommendations? I don't know if that's sent to somebody specifically. Let's see. I'm not sure, B, if that's meant for a specific trader or, but he's got another part to his question. Let me ask that one follow up here. When you introduce a new alert program, do you still keep good tabs on your older ones? So I can just say from our perspective here at FFR, and you can call in, I'll give you the numbers after, if you have questions on any of these programs or the performance going back to inception. So some of these programs that the traders have go back many, many years. So you can get the performance figures going back, since the program started. But yeah, so we do keep tabs. If you guys want to add anything, I know you all keep tabs because we get all your trades from your staff that sends them to us so we can update our records. So anything anybody wants to add on that? Go ahead.
I'll just make a comment that I believe that I have 9 programs, and they all get an equal amount of attention. That it isn't that one outserves the other, that it is pretty much looking at the charts every day for each of the services. And so it is the same. Sometimes they don't perform exactly the same way, and maybe there won't be a trade in one service that day, but there is a trade in one of the other services based on what is taking place. But they all get an equal amount of attention.
All right, fantastic. So Daniel follows up, Joe, to your response here. He said, so a $10 million account would be okay, question mark.
Okay, well, boy, with a $10 million account trading options, like, really, why do you even want to trade options if you can take 5% of your net worth and it's $10 million? Why even bother? Yes,
Good
you
point.
could. Yes, you could. Because $10 million in the SPY options, happens before they open. So, yeah, you could. And somebody asked, by the way, like for me directionally, even though some of my trades are spreads, they're still directional. So right now I'm positioned that March is not going to be kind. So that's my view. So when I say that not kind, I mean that I'm positioned for the market to move lower.
All right, yeah, perfect.
So I think to touch on that, I mean,
Yeah.
I know we have like a client that has 9-figure net worth. I mean, it's all about the risk capital that you're willing to put into any sort of trading strategy and how you want to diversify your own portfolio. So good question for like a registered financial advisor and discussing how you want to do your risk capital. But to Joe's point, I don't know that many people are putting $10 million into a single strategy, because then if the strategy does experience a drawdown, you may not want to have your full net worth into a single strategy, just like you wouldn't want to have it in an individual stock.
Yeah, exactly. And Daniel, you may want to call us because if you're thinking along those lines, then you want to have multiple strategies if you're going to put money to work like that, for sure. And most traders, as soon as they start, we recommend that they start with multiple strategies because it's going to help smooth out your equity curves. Different non-correlated strategies. When one strategy is underperforming, the other one may be outperforming. It's going to help balance that out. Christopher, give us a call. Talk to your strategist. We can help you with that for sure. Just give us a call there. Let's see. William says, Joe, if you want to go surfing, you're welcome to come over to the hill to La Costa. So an invitation there.
Well, you'd have to teach me, but I could teach you to golf or pickleball. I could do that.
Pickleball has become real popular here. So we're running a little behind. We're trying to wrap up, trying to get everything in an hour here. So guys, if you have additional questions, feel free to call us. I'll put up the number here in just a bit, but call us. We'll get all your questions answered. But we do love to speak to you and help you, answer any questions that you do have. What the traders are looking for in their subscribers. There's some things that we ask of you, and if you can provide them, we're going to help you out too. Number one is your story. We want to know, how did you find that trader? How did you find FFR? Just tell us a little bit about your story. We do ask you to provide your monthly brokerage statements, right? That helps us as you're going to sit down and you commit to a quarterly meeting with your strategist, so we can go over how are you doing? How are those strategies performing? Sometimes as you progress, You may transition from your building your wealth to starting to get ready to retire. And that's the case, we may have to make adjustments with the strategies that you have and so on. So do provide us with your monthly brokerage statements. You'll meet with us at least quarterly. And then if you're having success, and you can look at our Google reviews, we've had a lot of people come back and review us very positively. Provide a testimonial if you've had success with us. And then obviously let other people know. We get a lot of referrals, family members and stuff that people have had success. All right, that's what we're looking for in new subscribers, and that's what the traders are looking for. But think about the numbers that we showed you today. Okay, how would that help you? If you're a struggling trader, you're trying to do this on your own, would it make sense to partner with one of these professionals and follow their recommendations? In the meantime, you're learning, right? You're going through Keith's course, you're going through Wendy's book, all right, whatever the case might be, you're learning the strategy if you want to be able to do it yourself, right? So we call it learn and earn. But think about, if you've got an IRA that's maybe underperforming, or you've got money that you don't know what to do with, would this help? Would this help you reach your goals, right? Whether you just want to be passive and just execute the trade alerts, or have the broker assisted alerts, have it done for you, and grow your wealth that way. Think about how this might change your financial life. All right, so the offer that we do have for you today, we didn't want to just let you go without giving you an opportunity to get some discounts here. So if you do sign up today, all right, you'll have to call us. I'll put up the number there. We do need to speak to you because we do have to make sure whatever programs that you're looking at are a good fit for you based on your goals. So we'll talk to you. But if you sign up, all the traders are offering a $1,500 credit towards the annual fee of a program, whatever program that you're interested in. Again, we'll make sure it's a good fit for you, but you're also going to receive an additional year for free of that program. All right, so a fantastic offer here. But you do have to call us. Here's the numbers. Here, US, you can call the 800-883-0524 number. If you're international, right, we do have a lot of prospects and clients that are overseas. You can use the 737-292-4425. You can always reach us as well at support@ffrtrading.com, and a strategist will get back to you as soon as possible. So there's the numbers. Take advantage of this opportunity. This won't last, all right, I can assure you. As we kind of close out here, guys, is there anything that you want to add, some parting words of wisdom as we wrap up here?
Just want to say it's been enjoyable.
Yeah, it's been great. You guys provide a ton of great content, the trade ideas, the analysis, much appreciated. I've learned a ton, and I'm going to pull up some of these stocks on my charts and take a look at them here. Ian, anything you want to add before we wrap up here?
No, thanks for having me today, and just be safe out there. Markets are volatile again. The Dow is down about 260 points at the moment, so just be safe out there.
Joe, I know you're itching to say something.
Not really. March could be ugly, so be careful.
Is this the Ides of March?
Yeah, maybe.
Well,
if there's
my wife says nothing good happens in March. I don't know, so we'll see. And and Keith, any parting words of wisdom, Keith?
Just thanks again for having us on. It was great talking to you guys and talking to everybody here. And always consider the risk before the reward. I'll give you that little tidbit.
Well, that's excellent advice. So incredible session today. Huge thanks to Joe, to Wendy, Keith, Ian Cooper. Thank you for sharing your expertise, your trade ideas. Of course, thanks to all of you for joining us. And remember, if you want to get the exact trade alerts and strategies from the experts, just give us a call, 800-883-0524, or the 737-292-4425 number. Again, that that discount will expire. That's a $1,500 credit towards any program and an additional year free. So give us a call and a strategist will help you out. Again, we do need to speak to you, make sure it's a good fit for you. All right, that's it, guys. Have a great rest of your trading week. We'll see you back in the next webinar we've got coming up. I know we've got a couple of you coming up here in March. All right, guys, take care, and we'll see you back in the next webinar.
Hey, thanks, John. Thanks, everyone.